Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now to the show at hand.
Matt Zolk here. I'm the host of the Same Day Podcast, where I connect with top business experts and real estate leaders. Really should be top business leaders and real estate experts, because that's what we have on our show today, is a real estate expert. Past guests include Devin Howland talking about economic development in Fayetteville, Arkansas, Jonathan Schmidt of the Keyrenter team talking about property owners' frequently asked questions, and Kevin Evans of Liberty Air Services talking about HVAC systems, how they work, and why they are so darn complicated. Today's episode is brought to you by Chris Lyle State Farm. Chris Lyle State Farm helps you protect your most precious assets and investments, whether it's your home and auto, investment, rental properties, or other valuables. Call Chris Lyle State Farm for a quick and painless phone call to potentially save you double digits on all of your insurance needs. Visit diallyle.com. That's DIALLILE, diallyle.com, or call his office at 918-878-7771. Today's episode is also brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management and ownership. Tim, you know better than most how hard it is to line up contractors to get make-readies done in a reasonable amount of time after a tenant leaves a property. They're busy. That is, contractors. They're busy. The work seems to drag on forever, and all that leads to lost rental income. At Keyrenter, we line up our dedicated vendors so that turns can happen super quickly and we get more money back into the pockets of our owners. That's why no matter what rental you have, a single family home, a condo, townhome, apartment, we have the management solutions you need. Go to KeyrenterPMC.com or email us at info@KeyrenterPMC.com. Huge shout out to the real estate investment group that you lead, Tim. And then I'm going to introduce you briefly, because that's how we met. I just was looking for connections and network in the real estate community. And I emailed you and showed up at one of your meetings that meets at Mazzio's over at 61st and Sheridan. I've been happy to participate in those meetings over the last couple of years. So huge thank you. But an introduction, Tim Bakamjian is a real estate broker, an investor, and a property manager based in Tulsa, Oklahoma. He's also the director of that local real estate investment group that meets monthly. And he's been active in the real estate industry for more than 35 years. Owns like 50 rental properties, 45 rental properties. Who knows? We lost count. But Tim, you've seen it all. In 35 years, you've seen a lot. And I'm super excited to dig into kind of the ups and downs of real estate, what you've seen in your many years. And as you mentioned before we were on the podcast, you know, you talk to people every single day and you're learning every single day. I think that's a key component to being a good landlord and making money over time. But let's go all the way back. How did you get started buying and owning rental properties and landlording?
Well, hi, Matt. And first of all, congratulations on all your success. I mean,
thank you.
I've kind of watched you grow. First time I met you, you were telling me what you were doing. And I thought, well, this guy's going places, and you certainly have. I mean,
appreciate it.
What, 2,500 properties now?
There's a lot of them. There's a lot of them. We've been lucky, blessed.
Tulsa, Oklahoma City, Arkansas. Who knows where else you're going to end up?
I think we're going to Wichita. Actually, we're going to go to Wichita and see what's up there. I'm going to start exploring here.
Mark. Yeah, that's kind of like here. So great. Anyway, all right. As far as myself, I got my real estate license way back in 1986. So
I was 2.
Well, I'm 66, so
you look
let
good.
Someone else do the math. Thank you. Thank you. Well, I can't say that's because of real estate. Maybe it's just because I work out once in a while. But
maybe the gray hair. Maybe the gray hair is from real estate.
Yeah, I think you're right. Yeah, it was like your hair many years ago. So, but anyway, I got my license, and the reason I went in the business, I actually have 2 bachelor's degrees that are in fields totally unrelated to real estate. One's in political science, the other one's in journalism. Mm-hmm. And I did that for a little while in the late 70s, early 80s. But, you know, you can't make a living in any of that. The hours are terrible, and et cetera, et cetera. So I went into sales and marketing for a while, just some different things. And then a friend of mine told me that who was in real estate at the time said, you know, the market was not very good at the time. There were a lot of foreclosures. You know, the Penn Square Bank had closed in, I
Was
think,
that
the
the
early
savings?
80s.
That was like the savings and loan crisis?
And the savings and loan crisis. So there were a lot of foreclosures on the market. Rates were 10, 12%. But this person said, hey, there's going to be a big market for repossessed properties. And most realtors, traditional realtors, didn't know how to do that. They were very good at, the high-end homes and everything else, everything in MLS, but not that. So I said, all right, well, I'll try that. And so my first full year was 1987. And I did really well. I think I sold maybe more homes than anyone in the city. I sold almost 70 homes that year.
Wow.
But we had a little system. I wasn't even a member of MLS. I just sold HUD and VA repos and, some bank repos and all that kind of stuff. And we had someone in our office. It was a small company that basically handled the deal after I put it together. And it worked real well. None of them are very high. I mean, prices are obviously a lot lower then.
Right.
And, and they were repos too. So they were underpriced even for that market back then. But it was enough where, I made some pretty good money for the first few years. But I was paying a heck of a lot of taxes, a lot more, I was paying more taxes than I probably had made a few years earlier in that. So I asked my accountant, well, what do I do about this? I'm giving so much of the money away to the government. He said, well, you can start buying rental properties. And I thought, well, that's not a bad idea. I can defray some of the income. And I was working real hard. And then we had I was married and had a kid by then. But I was working like 17, 18 hours a day.
Wow.
So that wasn't really, the way I wanted to live the rest of my life and sit on open houses every Sunday and all that. And, with the real estate and sales, as you know, every time you sell something, that's great, but then you're unemployed again. You got to keep doing it.
Yep.
And one thing I had learned in sales and marketing was if you can, have something where you have some repeat income,
right.
And I even looked at insurance, I even dabbled with that for a little while, but I didn't like it at all. Because, if you're, say, a life insurance salesman or even, property and casualty, you get renewals and all that, and you just have to, give people good service and your income grows and grows. So I thought, well, maybe with rental property, that can give you that opportunity. So I started buying rental properties. I think the first one I bought was, I think in early 88. It was in Renaissance Park near, it's a house near 13th and Gary, which I still own to this day. I paid, I think $29,000 for it or something,
Wow. Did you have to do renovation? I mean, was that a repo house that you just bought instead of sold?
It needed a lot of work.
Yeah.
It was a family, I think it was an attorney who handled it. His mom had lived there, but then she was in a nursing home, and he priced it. Even the ones I bought, I was kind of fortunate, being in real estate and just having an eye for that thing. Obviously prices were a lot less then, but I also, paid under market even for that time.
Sure.
So, yeah, I'd knock your socks off if I told you how cheaply I bought some of this stuff.
Let's talk about it.
All right. Yeah. All right.
That $29,000 house is now worth what, by the way?
That particular one is probably worth about, some of them over there, I can't believe what they're going for, but I'd say 150 to 175.
I mean, 13th and Gary is a nice area.
Yeah. Yeah. There's other ones.
I would think.
Maybe. Yeah. Some of the brick ones, especially the brick and stone ones, mine's not, but it's in decent shape. So
what do you get in rent for that property today?
1,000, which that's another thing. A lot of what I say, I'll tell people, don't do it the way I do it. Whatever I say, do the opposite. Because I'll be honest with you, I don't probably charge enough rent on a lot of mine. That's probably a $1,100-1,200 property.
Is that a 3-1?
It's kind of weird. It's actually a 3-2. They added a room, but you got to go through another bedroom to get, so it's one of those deals.
Got it.
So,
we talk a lot on the podcast. We talk a lot, or we have spoken about, why property managers raise rents in general, right? To avoid tenants staying in forever and not talking about deferred maintenance, because they have the fear that you're going to, if they complain about stuff, you're going to come over, see the condition, see that, and then start raising rents because you're, now paying for maintenance. And my philosophy is always, let's actually raise the rent. That way it encourages them to not defer maintenance. It encourages them not to, not report a leaky faucet, or not report a drip under the faucet in the kitchen or whatever. So yeah, we have divergent views on that perhaps, but certainly $1,000 for a property that you paid $29 for is pretty good.
That's a good point. Raise the rent so they will call you. So, because a lot of times they don't, and you end up having to spend a lot more money on the repair.
Right. Now, instead of the drippy, the P trap or whatever, you're fixing the wood underneath it, and you're mitigating mold, and you're doing all the other stuff, right? You can do it the same way by just doing an annual inspection or a semi-annual inspection. But oftentimes, in the middle of that, in between those inspections, things happen, and tenants don't want to tell you about it if they're hoarders, or if they're just not paying a market rent. That's my philosophy, anyways, and that's what we do with our properties. But so you bought that house. Let me not derail you. You bought that house and you started buying other houses. What was your CPA's advice was born out of the idea that you're a real estate professional and you have active income, and then you can take depreciation and that's an active loss theoretically. Is that how you got your income down? Yeah. I mean, so you're in the golden position that we all want to be in. Doctors and lawyers aren't necessarily in this position because they're not real estate professionals. But if you are a real estate professional, buying real estate is such a beautiful, beautiful thing because it's active loss against active gains, as opposed to a doctor that has passive losses against their active income. Or if they want to offset passive losses against passive gains, they have to have enough stock market gains, dividends or whatever, or sales from their stock market portfolio that they can actually offset the gains with the losses. So you're in an advantageous position in so much as you're a full-time real estate professional, and you have or can take advantage of active losses from depreciation. It's a nice spot to be in.
Mm-hmm.
So you bought that first house, and then?
Well, then I bought, I just started buying, I mean, not like every month, but probably the next year I bought like 3 or 4 more, then 3 or 4 more, almost, every year for a while. And like one between Admiral and Pine on Harvard, I think I paid, $9,000 for it.
Wow.
Let's see. I own another one. I bought this one sometime later, though, near that one at 13th and Gary, one at 14th and Florence Place.
Beautiful.
And I think I paid $52 for that.
What'd you learn from those early acquisitions that other people can gain from experience, or from your experience rather?
Well, obviously, I think you have to buy it right, and you have to. When you look at a property, it's not just what you're paying for it; it's what are you going to have in it before it's ready to rent or to resell. So that's the key number, and so you have to do your homework, talk to contractors or whatever, or after a while you get a pretty good feel for it yourself.
Did you make any mistakes, any significant mistakes that set you back in the first 10 transactions that you did?
Oh, I think there was a lemon or two in there I bought that ended up needing more work than I thought. Probably just because I didn't do my due diligence.
Yeah.
Or I didn't hire the right people to do the work.
Is that they stole from you, or that they just dragged the work out forever, or that they overcharged you, or what happened?
They didn't do a very good job. I'd have to go back and fix some things that they did. That was probably the main thing. I really haven't had anyone, well, at least not back then, steal from me,
Nowadays, you have your own contracting crew. So when the house needs renovation or you need to do a unit turn, you just rely on the same guys. I mean, are those just people in the industry that you've known for a long time and have been working with you forever, or do you have them on staff?
I don't really have a staff per se. They're all contractors. They're all, I can't make them come to work. I don't always have something for everybody, but there are people. One guy's worked for me for 15 years. He actually works for a huge property management company here in town. But every day after work, and he's my age, He'll work for me for a couple hours, and on Saturdays he'll work about 6 hours. And
Wow.
he can fix about anything. In fact, I just talked to him right before I got on here with you.
Yeah.
I This morning, for instance, I went to 3 of my different properties that I'm. One thing that's taken a lot of my time right now. I'm doing some major remodel on a few right now. So I've got some extra income, and it's just sitting in the bank. It's just going to lose money every month because of inflation. So I might as well spend it.
Yeah. Yeah.
I might as well spend it now because it's only going to cost me more later if I wait.
100%.
So
What's the nature of the renovations that you're doing? Sheetrock and roofing and painting, or like deeper stuff? Are you moving walls around? Are you redoing plumbing?
Depends on the house. Let's see. I do own one older home near 15th and Peoria. It's even older than me, if you can believe that. And we just had to put a roof on it. I've only owned it a few years, but I managed it for a long time. And so when the owner, he actually left it to me and a few other people in his estate because he was never married, never had any kids. So I was kind of fortunate. But he never did anything to it, basically. So I just had to spend over 20 grand on a brand new roof.
Wow. How big of a house is this? 20 grand. That's a substantial roof.
Well, the problem is it needed some structural work on the rafters.
Got it.
It had 3 layers of shingles plus the shakes.
Yeah.
So it was a huge, huge job. It took them, 4 full days of a full crew out there.
Wow.
And it had a basement also. And I just did some major piering work on it. So, a lot of those old homes over there, and there had been some things that hadn't been done right. So fortunately, I got in that one, like most of the other ones I own, pretty cheap. Yeah. So I just spent $35,000 on it just in the last, couple weeks, but I'll get it back. I mean, it's in a neighborhood where, they sell for quite a bit of money.
How do you think about making major investments in your property? I mean, at what point do you stop repairing an HVAC system and instead just replace it?
Well, my HVAC guy is kind of like me, just, independent, business owner, not a big company, not someone you'd ever see advertise on TV. And, I basically rely on him. He's always treated me right. He's given me good prices. He'll even, come out on Saturdays or Sundays sometimes and do a repair for me or, and not charge me double.
Yeah,
so
I love that.
Kind of things like that. So I rely on him. If he says, or or he gives me the options, you can repair it or you can replace it. But if you repair it, you're going to keep having this problem every year. You're going to have to spend several $100s. So usually it's a pretty easy decision. So
you trust him. You trust him to make that decision for you. Ultimately, he'll tell you, hey, there's a trade-off. And you don't ever feel like he's just selling you a system because he needs to make his mortgage payment.
No. In fact, he's a friend also, a longtime friend. He works on my own system at my house. And I have a few other people like that, that I've given quite a bit of business to. And they don't want to spoil that relationship by trying to take advantage of me because obviously I'll find out one way or the other.
Yeah.
So as long as you have people that you can trust, but that hasn't come overnight, and we've all made mistakes there too.
Yeah. What do you do differently in 2022 than you did back in 1987 when you bought your first house and leased your first house?
Well, I was young and ambitious like you. Now I'm kind of on the tail end. I'm more just trying to maintain what I have. Sell one here or there. Just trying to streamline my business,
Which ones do you sell? Just opportunistically when you think the value's right? How do you decide which ones to sell?
Well,
do you do 1031 exchange?
I have done a few of those. Well, I'll just give you the example. I did sell one about 4 months ago. over near, gosh, what's the name of the neighborhood? You probably know. It's near 6th and Lewis, between Utica and Lewis.
It's Pearl District.
Pearl District. Yeah, thank you. Well, I sold one over there because, it's a pretty hot area.
Mm-hmm.
It's a house I've owned a long time. I think I paid $13,500 for it, but
Wow.
I had to spend a lot of money on it over the years. It was actually vacant for about 5, but I said, well, I just really need to fix this up. So we got it where it was in great shape, and I sold it for more than 10 times what I had originally paid for it, which was still, I didn't even, of course, the market has cooled off a little bit, but, I pretty much knew about what it would bring, but, I had like 6, 7 offers within 48 hours.
So
and
you put it right on the MLS.
Yeah, I put it on MLS. Yeah, another realtor. I had 6, 7 contracts, and I had to make sure I did that properly, that I gave everyone a fair shot. And
did the property end up transferring to an end user or to an investor, do you think?
I know what it did. It transferred to a investor, and they made it into an Airbnb.
Wow.
So, near downtown.
Sure. Right next to Hillcrest.
Yeah, right next to Hillcrest. And I thought, well, that's a good idea. And maybe if I was younger, I would do something like that, but I didn't want all the management headaches of that.
It's so annoying. We managed 5 at some point, and it was like $1,000 an hour in terms of my monthly income, but it was the most intense 2-minute intervals of my life. I'd be sitting on the couch at 11 o'clock, and somebody I'd get a ring on Airbnb, and it would be like somebody trying to get into the house. Despite my rules, I said you can only go in between 8 a.m. and 9 p.m. They'd be at 11 o'clock knocking on the door. The key wouldn't work. The door code wouldn't work. It was always user error because I could see the door code being entered incorrectly on my phone. The video guides and the paper guides didn't help. It was just, and you're always so worried about your rating dropping that you do whatever it takes to make that.
Yeah.
And there was a point at which, like Sunday morning, I said to my wife, sorry, I've got to leave. And she was like, well, it's 9 o'clock on 8 o'clock on a Sunday. Where are you going? She's like, what? And I said to her, I've got to take breakfast to these people at the Airbnb. It's like, I'll bring you back a bagel, like it was just so annoying to manage those. So, certainly Danny Waddell is awesome, and she does it in town. She's probably got 50 of them that she manages, and she does a great job. Her team is amazing. And I recommend her as often as I can, but it's such a terrible business to be in. You've got to have the scale on the team, and if you don't have the scale on the team, it's like you're running a hotel, and you don't want to run a hotel. So
no, well, everything you said just confirms, why I didn't do it, and I'm not big enough to really. I would hire that out, just like you said. So, in fact, I did buy one. One of the last ones I bought was a few years ago. Near 21st and Yale, just down the street, from
is that like Whiteside?
And no, it's right on 21st Street between Yale and Sheridan. So you can walk to the fair or any other stuff, anything that goes on there. So it would be absolutely perfect for an Airbnb. And
I'll put you in touch with Danny Waddell and see if you want to convert it at some point. They make a lot of money, it seems. I don't know, after you pay for all of you can have Danny on the show and ask her, but after you pay for the electricity, $400 in summer for electricity and the cable bill and, all the other stuff, I wonder if it makes a ton more than and you have vacancy, of course, during down seasons. But, I wonder if it makes a ton more than a long-term rental. Long-term rental is much less headache, especially if you're operating, 50 properties at your scale with your skeleton crew. It's like, just keep them long-term.
Well, I think you're absolutely right. I mean, I have the same tenant I rented it out to. In fact, she came from another property, and she has a little hairdressing business, and the house was set up where she can actually operate with a separate door, and she can do that. So she said, "You're never getting rid of me." So
I said, "Great." Do you bump her rent a little bit every year or no?
Well, I'm about to. Yeah, don't tell her, but. But yeah, I mean, that one is probably a $1,500 property, and I'm renting it for only $1,200. So I need to bump it up a little bit. But a lot of these people are just. I mean, you tell me. A lot of these people are working people; they're barely making it. And there's probably 20 to 30% of us that are doing fine, but most people are just, check to check. And
the challenge is this: if there's not a proper return on capital, if there's not a proper return on the capital that you invest in that property, or another investor invests in that property, or a return on the value of that property. Because if you could go sell that thing right now for 200 and you're only in it for 100, but it's worth 200, that's, you've got equity that's not doing anything in that house. And if the return on that total asset value is not reasonable, then it stops people like you and people like me and other investors that are coming in from out of state from buying those properties. If they don't buy those properties, they fall into disarray. There's deferred maintenance and everything else. And if they fall into disarray, then that resident of that property does not have a nice place to live.
Right.
So it's not that you're trying to be a heartless capitalist, or that I'm trying to be a heartless capitalist. It's that if there's not proper flows of returns to the capital invested, then ultimately the person that's harmed is that resident in aggregate. Right. And that there's not, she just won't have, when you kick her out of that house to sell it, ultimately, whether it's in 5 years or 10 years or 20, she won't have other options that look nice, that have granite countertops, that have some updates, where the HVAC system is kept up to date, where there's proper service and all that other stuff. So ultimately, the residents of our town, the tenants, the people that rent in our town, are harmed by rents that don't increase, because the return to capital means that people would rather put their money into the stock market. People would rather put their money into bonds these days. 10-year treasuries at almost 4%. So you have alternative uses for capital that make more sense. And then all of a sudden they find themselves with either living next to dilapidated, boarded up houses, or living in a house that has significant, deferred maintenance and is in disrepair, or they don't have a place to go. And if and we're in a situation now where there's a dearth of workforce housing, that's housing between $900 and $1,200, $900 and $1,100 a month, because there's been so much, just so many properties that are in disarray up on the north side and on the east side and whatever. So I view it more as, raising rents in the broad scheme of things is really doing the community justice. It hurts some individuals, but it certainly, it provides for housing for more people over a longer period of time if there's a solid long-term return on investment. That's my philosophy. And
I think that makes sense. Yeah, I think that makes sense.
But so who knows?
I'll tell her you told me to raise her rent.
Blame us. I'm even happy to go over and have the conversation with her myself. How about that?
Okay, maybe you'll get a haircut out of it. Who knows?
I go to Joe and Co over here at who's the wife of a good friend of ours in EO, an entrepreneur organization, and she just moved her salon to a really nice fancy salon. So I don't know if I can leave at this point. She might need the income so that she can sustain the new new rent rate over at her new spot.
All right.
On Cherry Street, fancy enough, but I'll see. We can have both conversations at the same time.
Okay.
Interest rates are up. I think prime's now at 3.25 after the latest Fed rate. That means, the Fed funds rate's at 3.25. Prime's at 6.25. 3 points above.
Mortgage rates just went to 7, didn't they, Matt?
I mean, I'm signing a note over the next couple of weeks, probably at 5.75, locked in from before. But I've been hearing rates in commercials. It's weird that I've been seeing conventional rates at 7 for sure, and they've been higher than commercial rates, which is crazy. I've never seen that, but I've only been in the industry for 6 or 7 years, so there's plenty of stuff that I've never seen. I mean, what do you see? What are some key lessons that you learned over? I mean, you obviously sustained your portfolio. I'd love to know whether you dropped or portfolio size dropped or whatever in the 2001 tech bubble bursting, the 2008 mortgage lending crisis. What experiences can you share for those of us that have not gone through a significant recessionary event in the U.S. economy and the housing sector specifically? I mean, how did you keep your portfolio, and what can we learn from some of your wins?
Well, with me, and I guess it's kind of an exception, I bought so many of them so cheap. I didn't buy, a high percentage of the properties I own are, say, between 11th and Pine going east from, say, Utica out to Memorial Mingo.
It's a beautiful portfolio. Beautiful cash flow. Beautiful rental market.
Yeah, so I didn't have to pay a whole lot for them. especially way back then. So even though we've had, like the dot-com bust, and then, the real estate bust, 7, 8 years later, that didn't affect me too much. Obviously, my rents had to be, moderated, but, you know, by that time I had a lot of them paid down, and now I'm fortunately in the position where most of mine are paid off. I don't have that
Yeah.
much debt.
Yeah.
So, and that's a lesson I think for, a lot of people that are younger. Just keep them up. And what'll happen is, the whole idea is, when you get to, say my age or not even that, you're going to have just a nice cash flow every month. And, except when you spend 35,000 on a property in 2 weeks, that kind of destroys that for a while. But at least I had built it up for a while where I could do that,
Yeah.
So, so really right now is, it's a long-term plan, and it's kind of worked. It's one of the things I've done my big mistake has been when I've started to dabble into things I didn't know much about, like, into the stock market or just some investments that,
Right.
startup companies. I had a few people I knew that, were looking for something. They thought they had the next big thing, and all it took was a big chunk out of my wallet.
Yeah.
So I said, I'm just going to hone down and
stick with real estate.
stick with what you know. Yeah, I think
But
that's certainly.
You mentioned interest rates being at 10 to 12%, which is, 3 to 5% higher than they are now, maybe 4 to 6% higher than they are now. When you started, what's the key? I mean, for people that want to continue buying through this potential, downturn, we've seen prices stabilize. We've seen days on market increase. It's getting easier to buy houses. There are fewer, fewer offers coming in, more seller concessions. What do you say? I mean, the deals don't make sense from a cash flow perspective necessarily when interest rates are at 7% or you're paying 6.5%. What did you do when you took out loans originally at 10 or 12%? Did you ultimately refinance those out? If you don't have much debt, you obviously didn't refinance them in the recent low interest rate environments. What should people do? Should they continue buying during this downturn? Should they not when interest rates are so high?
Well, I think it just depends on what you find. I mean, there's, as you probably know, and a lot of other investors, there's good deals out there all the time. They're just not as obvious. Sometimes it's a word of mouth kind of thing, or, next door to a house you're renovating, or, somebody's aunt, is going into a nursing home and they just want to dump this thing. So you always have your ear to the ground, I think, as far as that goes. And so if you, and I think what's going to happen over the next 6 months to a year, probably for several years, we're going to, even though Tulsa's been a good market, I think we're going to see maybe even some price decreases in some. So I think there's going to be some better opportunities. I was just telling that to a young investor earlier this morning. So I think if people are patient and don't, just think they should go out and buy the next thing just because they're in this business, I think they'll be rewarded.
Yeah. So patience. I mean, and then ultimately, if you're in a 7% mortgage, I guess you can refinance out if it ever drops again.
You can refinance out of it if it ever drops. At least with the ones I bought, they were so cheap. Heck, I don't know if you know Sharp Mortgage, but I was paying 12.75%. That's really how I got. If it wasn't for George Sharp, I wouldn't own nearly the many I do, because he loaned me the money. He knew I was good for it, but I was only borrowing, say, 25,000. So the rate didn't make that big a difference to me. I was still able to at least break even on the thing, with the idea that it would pay off eventually, and its closing costs weren't high. So, I just looked at the whole picture and said, I don't mind borrowing money at this rate. So,
how do you think, from the real estate investor group that you chair or manage or whatever,
Yeah.
What do you think? How did people fare during COVID? People collecting rent for the most part? Were they did they remain solvent and liquid? Do you know of any people that had to offload properties because they weren't collecting rent? Just generally, how do you think people did?
I think most of the people in that group are pretty savvy, and a lot of us took, frankly, full advantage of all the free government money that was floating
Right.
around. Is floating around. I have a few of them that got government money, and I received money up through like February, March of next year.
Wow.
So they just know how to use the system, and that's going to run out, and then it'll be interesting to see whether they can get back to paying full rent again. But
Yeah.
a lot of us survived because of that.
So you, I mean, you survived COVID pretty well, and then you didn't have any significant issues personally.
No, and I don't think most of the people in our group did. As you know, a lot of people come and go in this business, but the ones that come to those meetings are people that have survived,
Yeah.
a lot of the ups and downs already. So
I saw Jerry Sokol. Do you know Jerry Sokol, by the way?
I know the name.
He's a long time real estate investor. He's probably 80 now, and he owns a lot of 100 plus properties. He's been doing it for a long time. And I think it's basically the only thing he's ever done. And I saw him the other day, and he rolled down his window and he said, "How are you, Matt? What's going on?" I said, "Things are great." My kids were with me, so we were chatting about the kids. But then he said, "Man, people don't want to pay rent these days. They're so lazy. They don't want to work. They just sit on their butts all day, and then they don't want to pay rent when it's time to pay rent." And it was hard for me to understand how much of that is kind of like old boy, like hyperbole, and how much of it is true, and how much has changed in the last 50 years. I mean, you're receiving government assistance back then. You're about the same person as you are now, right? As people receiving assistance now, there's a certain, there's certainly a certain need for it. There's also a certain category of the population that takes advantage.
Absolutely.
So I kind of feel like it's a little bit like your grandmother paying you a nickel to mow the lawn because that was the price it was. And, walking both ways uphill in the snow, butt naked or whatever it is. Like, it's just life is hard. And I don't know how much of it's hyperbole, but I didn't feel, I mean, we also collected probably $2 million in government assistance from, people that submitted their documents to OKCCP and community cares to get their rents paid. And the rest of people seem to do just fine. I mean, there's a little period at the beginning where it was uncertain and everybody else got back to work, especially in Oklahoma.
Right. I think around here it wasn't quite as bad. We weren't locked down as much as other parts of the country. So I think we're kind of fortunate here. And so I don't know too many people that really got devastated. We all had a few of them, but not where it just knocked you out of the business practically.
How do you deal with, generally, I mean, COVID aside, how do you deal with non-paying tenants? How much time do you give them? How much grace? What sort of communication is enough for you to feel like they're ultimately going to pay? Do you ever get tenants that get 2 months or 3 months behind on rent? What do you do?
Well, that's another thing that I don't do very well, is so people can learn and do the opposite of what I do. I'm usually a little bit too nice. I let it go a little bit too far. And I've had several, 2, 3, even 4 months behind, which is not what I do anymore. But and I've had a few that became a month or two behind, and then they caught up, and they're still with me. So sometimes you just got to kind of figure out whether you think they're gonna get there or not. If you don't think so, then you got to pull the plug. And
are you participating in any of the Tulsa County mediations, or are you just sending them straight to eviction?
None of the mediations. No, I just do the 5-day notice, and then I just go file the paperwork, and set a court date.
The old-fashioned way.
Yeah, and hopefully they don't show up, and I'm granted possession.
Yeah. And then you have to clean. And then you have to clean out the house.
Then I have to clean out the house. Now, something you may not know: there's a bill before the legislature, of course, probably won't be heard till next year. It'll probably get thrown out, where landlords will be able to gain possession of the property the day they win in court.
Wow.
So that would be, I mean, no, most of the time when they try to pass new laws or regulations, it's anti-landlord, but this is one that could be in our favor, which probably means it'll never, become law.
But then what happens now? You have to wait. The judgment happens, and you wait a couple of days for the judge to actually sign the decree, the paperwork, and then you post a 48-hour notice.
The sheriff does. Then you take the paperwork to the sheriff.
If the sheriff's going to lock them out, but otherwise you can just post it yourself and go in if you think they've already vacated the premises.
Yes. Yeah. But if they have stuff in there, then you got to hold on to it for at least 30 days and then, publish
If it's a value. If it's a value. Correct. So if it's a bunch of dog food, you might not have to hold on to it.
Maybe not. Yeah. Or food in the refrigerator and the electric's off. Yeah. So, and they tell you to take pictures and all that, just so they can't say, I had a diamond ring in the house and, what happened to it kind of thing.
I always have tenants that leave diamond rings in the house and they get evicted.
Don't they? Yeah.
Standard.
And they never want to trade them for rent. Yeah.
Standard. Very, liquidatable items that they don't want to liquidate to pay rent.
Right. Right.
Any final experiences that you think are worth sharing?
Well, I think
tips of the trade.
Screening your renters is obviously extremely important. And,
how do you do that?
Well, I take a full application. I use the one that's, the Real Estate Commission. I just get it off their website. And, I'll check the references. I'll check the rental history. Another thing, and I probably should do this, and I'm sure you do it, is I haven't very often run credit reports. So,
but has that without running credit reports, you've been able to filter out through what you said, the references and the previous rental history, you've been able to filter out most of the bad tenants?
Yes. Yeah. In fact, I don't know if I have a single one right now. I don't have any that I'm about to evict or that are, maybe I have one or two that are, a fair amount behind. They better catch up soon. But most people aren't moving right now. It's too hard to find somewhere. So they're being probably nicer to me than they normally are.
Keep that in mind when you go to raise rents.
Yeah, we'll see what happens. I think the rubber is going to hit the road on some of these people. Yeah. I mean, I've had some, and again, don't do what I do. 5-6 years, and the rent's still the same. So.
And what's your philosophy? You just don't want them to have an incentive to leave? Is that the idea? Do unit turns and the rest, or are you just a bleeding heart?
Well, I think there's a little bit of that. I'm a little bit of a bleeding heart. And I'm making money in the property because say it's like that house at 13th and Gary. I've got that paid off. I'm very fortunate. So I'm making money. And do I want to raise the rent $50 or $100? Yeah, I'd make a little bit more, but that $50 or $100 means more to them than it probably does to me. Not that it's not important to me, especially when you spend the kind of money I'm spending right now. But I almost should do it at. It's just, in a way, I think they'll start feeling they're taking advantage of me when they know I'm not raising the rent. So I need to raise it some. Yeah.
I think our offices are not very nice. We're here at 14th and Lewis. Our offices are not very nice. The interior is not super nice. Exposed brick you can see here behind me. And the exterior of the building is fine, but nothing super fancy. And that's purposeful because oftentimes our tenants come in to pay rent. We discourage it. We want them paying online or at CVS or Walmart or whatever else. But they come in and pay rent online, or they come in and ask a question about their lease, or they sign a lease or whatever else. And they think that we own all the properties. They go, wow, look at all they see 100 properties on the website that are currently for lease. And they think that we're the owners of all those properties. And I have to explain to them that we're not, if I ever have that conversation. But, I don't want them walking in and seeing some big fancy office with diamonds on the walls and thinking that we're just minting money off of their thing. So there's definitely a trade-off where, you don't want to be the big, bad, greedy landlord, but you also have to have a reasonable return on your capital. Have you ever felt like your tenants want, take advantage or feel like they should take advantage because, you're the big bad landlord that has all these houses. You've got $5 million worth of real estate and, here they are, poor old me. I'm just renting the property from you.
Well, I kind of take that philosophy that you just said. I'm in my office right now. It's in a small brick office building at 31st and Sheridan, and homeless people walk, in front of it all the time. I
You
pay
can help some of them.
$4.50. Yeah, I could. Yeah, I could. I could find I could give them your number and maybe you find housing since you got 100 vacancies. But no, it's just a one room place. I've sized down over the years. And I drive a 16-year-old pickup. And my other car is not much newer than that. So here I am in my Tulsa t-shirt and
I can't see it.
You can't
I love that
see it?
shirt. I love that shirt.
Yeah.
There you go.
I got it. There you go. And I'm in my shorts that have paint all over them. So
Yeah.
I
So
think
you keep a low key profile.
I do. Yeah. So, and most of them I don't tell them that I own a lot of properties. They know I do already, but they don't really care about that stuff.
Yeah.
And, so, I live pretty modestly, really.
I know, at the real estate meetings, you're always on top of legislation. You're always on top of interesting articles in the Tulsa world.
Mm-hmm.
What are you reading,
Mm-hmm.
generally speaking, to stay abreast of the industry? And what are you reading for personal growth, generally speaking?
Stay on top of the industry. I read a lot of economics news and financial news. And we're really at our last meeting, which was just a few weeks ago. I had another property manager, Charles McBride.
I love
sure.
Charles. Yeah.
Yeah. Charles probably knows more about what's going on.
Well, he's on the Oklahoma
overall.
Real Estate Commission. He's on the board. He's kind of involved in
past
legislation.
President of the board.
GTAR.
And and they track all the legislation going on. He goes to the meetings where the city's always, they have all these do-gooder housing people that are always trying to, and they've got some things coming up, that I think your fellow landlord should be aware of. And if we don't get involved politically, frankly, and try to attend some of their meetings, that it's not going to be good for a landlord.
Well, there was some of the stuff that was related to mandatory inspections of every rental unit, and the charge.
Mm-hmm.
I mean, it was a $4,000 or $5,000 charge for annually to big apartment complexes because they had a certain number of units, and there was some of that was just ludicrous. I think they tabled it. It was up for vote at the council. They ended up pushing it back because there was so much. I actually attended that meeting, and there was so much outrage from landlords in town that the added expense associated with it was terrible. And frankly, it's a huge added expense to people that are playing a good game, right? That are not kind of constantly in the bad graces of the city officials, et cetera. And I think folks like Brant Pitchford, he's doing great work working in neighborhoods. They're cleaning up neighborhoods, but ultimately they have some rules, like the rule that came down that said dumpsters need to be fenced in, which it makes sense. They're unsightly. They should need to be fenced in, but fundamentally, fences provide hideaway for people that are doing bad things. And if you have an apartment complex in a bad neighborhood where people are dumping couches and mattresses and other stuff, those are also the neighborhoods where, drug use and drug dealing is rampant. And those people can use a fenced in area, especially the size that, something that's, 200 square feet that fits 2 dumpsters or whatever, to do things that are nefarious in nature. And it doesn't, they don't always see it. They're trying to do good things, but they don't always see it from the other side. And that can be dangerous. And it's important that we use our voice to kind of highlight those things and make sure everybody's aware of both sides of the coin.
Well, one thing Charles said at our meeting 2 weeks ago was those meetings are still going on with these people that are trying to change some of our regulations. What they're doing, people like you or me don't even know about them because there's 4 city councilors that are meeting. And so I asked Charles, well, isn't that violating the open meeting law, when they all get together? He said, only if you have a majority. So a majority, there's 9 city council people. If you have 4 of them, you don't have a majority. So they can meet privately with some other people like that and and then all of a sudden spring something on us. So we've got to be very aware of these kind of things. And,
Yeah, the Tulsa Apartment Association is good at keeping people abreast of it. So if you're not following them and talking to the people over there, it's probably a good thing to start doing and bringing some of that information to the meetings. It is super important, and it affects all landlords in town, unfortunately.
Especially bigger, I think what Charles said was anything over 4 units and above, they want to charge $20 per door, annual inspections, just all kinds of things. And then he said a lot of things that are happening like on the coast, where you're not even allowed to investigate the criminal background of someone or run credit reports. They're trying to treat, in other words, if you were a convicted felon, that I shouldn't even know about it if I'm considering renting to you.
So I know in Appfolio in Oregon, maybe in Washington State, no longer on our reports, for example, they give us credit, they give us criminal history, they give us sexual predator watch list and terrorist watch list. In Washington State, they're not even reporting on criminal anymore. So they're not pulling the records on criminal through the major software providers by state law. It's just crazy. Yeah.
And so we can't assume that those kind of things will never come here.
Right.
Usually things start on the coast and they just end up here. So we've always got to be watchful for that.
Yep. I appreciate it. When's the next meeting coming up, Tim, for the real estate investment group?
It'll be in October.
How do people find out about it?
I haven't, we kind of keep a low profile on that. Just a little bit about those meetings. They've been going on for about 10 years. And I didn't start the group. It was started by a father and son. And so they contacted people they knew in the industry. And they kept it going for about a year and a half. And I think the father got ill and then the son got busy with some other things. So they just basically shut it down.
Wow.
And they were meeting at different places and just not letting us know until the last minute and this and that. So I thought about it for several months. I thought, well, we had a good thing going here. We had some good speakers. Everyone was learning. Friendships, business relationships were developing. So I just kind of reached out to several of the key people, and the former owner gave me a list of his his email list and all that. So I just reached out. Hey, let's see if we can start this thing again. So I did, and it's been going ever since. It's not as big as it used to be. I think people just fall out over time, or they hear the same speakers year after year. But we have a core that meets every month and is very loyal to the group. And even if I don't have a speaker, which is the case sometimes, we just sit there and joke around and talk about real estate. Everyone has new experiences every month. It's an ever-changing industry, as you know. So.
Yep, and always little tidbits. I remember I was there a little while ago, and maybe 2 years ago, 3 years ago.
Yeah.
And you said, I've got a vacancy coming up in December. Does anybody have a potential tenant? And I leaned over to you and said, why do you have a vacancy in December? If you had a vacancy in December last time, you should have made it an 18-month lease so that your vacancy came up in June, prime leasing season. And you said, well, I hadn't thought about that before. So always little tidbits that you can get from that group for sure.
I know. And ever since then, I make sure none of my vacancies happen in the dead of winter. So and I think a few other people's ears perked up when you said that as well. So
cold in winter. You don't want to move in winter. Terrible.
No.
Snow on the ground.
No, exactly. So
Tim Bakamjian is a real estate broker, investor, and property manager here in Tulsa. He's also, as we mentioned, the director of a local real estate investment group that meets monthly. He's been active for a long time in our market. Tim, I really appreciate your insights coming on the show and chatting with some of our listeners about the things you learned in the real estate industry over the last 35 years.
Well, Matt, I sure appreciate it. But now you're going to have to do me one favor a few months down the road.
No problem at all. I'm always at your disposal. Always happy to help any way I can. I know the biggest thing is adding vendors to that list that you circulate to the group, and painters and clean out guys and everything else. That's a huge help to so many investors here in Tulsa. And I know the contractors also appreciate being on that list.
I had some floors refinished at a property I own, and I got that name from someone else in the group, and I've used the man ever since now. So I love it. But no, I'll have you come 1 month and you just talk about your experiences, and what you've learned. And
always happy to. Tim, thanks for being on.
My pleasure, Matt.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.